you ever wondered what professional traders do before they open a trade? I'm going to talk to you about the 3 things that professional traders do before they actually open a trade. And these are important little factors to take into account. You know, when you're about to take a trade, what's the first thing that you do? How do you plan your trades? How do you plan your day? Do you have a journal? Because a journal is really important so that you can go back on your old trades and you can see for yourself whether these were good or bad trades. So for me, the first thing that a pro trader does before he goes and looks at taking a trade is he looks at the market structure. What market structure do we have? How does the structure of the market look? Is it trending up? Is it trending down? What sort of structure do we do? We have any pattern in the market? What's actually happening? So market structure is probably the first thing that you're going to go and look at and spot before you decide which way you're going to take a trade. You might have drawn your support and resistance in and you'll be seeing which way the market's going to go. By the way, guys, I'm going to go into the charting in just a little while and I'm going to show you how the support and resistance system works. With the support and resistance will come effectively what we need to look at and how we need to look at the markets when we're trading. The next thing you're going to need to look for in the market is an area of value. Now that might be at a resistance level, it might be at a support level, it might be a supply and demand, but you're going to look for an area of value where you're going to make a good profit in the market. You're going to look for an area that's going to provide you with the right profit. So you're not just going to jump in and take any old trade and hope that that is going to be somehow successful for you. Remember guys, trading is a 50-50 game. 50% of the time when you take a trade, you will have success. And 50% of the time when you take a trade, you'll make a loss. And that's just with any system. You can't tell me that you got a system that runs 10 out of 10. There will always be losses with every system. But everyone has an edge that works for them and an edge that gives them an edge in the market, which tells them they can beat the next trader. Just remember, if you're a beginner trader, a pro trader, a middle of the road trader, whoever you are, just remember that you are up against other traders out there, other pro traders that might be far better than you at the end of the day. And when they choose a buy and you choose a sell, you might be wrong. And those are the 50-50 in this game. The fun thing is even if you're a pro, there's no guarantee you're going to get it right. There's always that 50-50 factor that comes into play with this particular type of game. But before we go to the third thing that a pro trader does before we get into this whole scenario, we're going to go and have a look at the charts. Just remember guys, I've got a Forex book for you down there in the description. Go and get it. It's totally free. It talks about the trends and the trend is your friend and that sort of thing. And also visit the secret blog. The secret blog, I put a trade idea out there for you every single day, unless I'm in hospital or not available or something to that effect. But yeah, generally I'll put a trade out there for you every single day. And it's just an idea. It's not trading advice. I don't give trading advice. Just an idea so that you can get a feel on the markets. But while we're here, before we go to the third thing, let's go and check out the charts and show how we trade support and resistance, and you get a feel for how we trade the charts. So you want to know the 3 things that a pro trader does before they take any trade. Obviously, the first one, like I mentioned to you, was they're looking at the market structure. The first thing you spot on this is the US 500 on the 4-hour chart. First thing you spot is that this is extremely bullish. And what it's done now is it's hit a point where people have become nervous and they're a little bit concerned about what's going to happen next. So it's creating a bit of a flag pattern. What does this look like on the higher time frame? What does it look like on the day chart? Well, if you take it to the day chart, there's a very clear picture here. Look at that actual flag. Look at that. That's a full-on pennant or flag. Look at it. The basis of this is when it breaks out of the top of this, it's going to carry on going long. There was a pennant over there and it carried on going long. You see, up, down, up, and there she goes. So this one could potentially carry on going long. You go back to the 4-hour, let's have a look at what she looks like. Always got to make it a little bit bigger so we can see what's going on. Hey, your market structure looks very clear. Now you don't want a whole lot of lines all over your chart. That can be quite messy. You honestly don't really want that. This can be quite annoying. So take those out of the way, always have those out of the way. It's very important to look for your market structure. And then what we're going to look for is our entry point. Where are we going to take this trade? As I showed you now, this would have been pretty much a situation of almost a flag pattern. So on this particular product, you might want to look at something more in the lines of a trade when it kind of goes through and comes back, tests that, and then goes out. You might want to look at a trade like that. But That said, if you remove all of these little drawings on the chart, and you just look at the 4 hour, and let's just take it to a line chart so that we can get the closing prices as always. You've got a bit of a support lying in there, and you've also got a resistance lying over there on the 4 hour. So on the 4 hour, you can actually already take a trade on this. So if this gives you a green candle coming out of here, you can actually grab a trade going that way, and hopefully it'll land up in this resistance. If it breaks through that resistance, clearly it's going long, and that's what you're looking for at the end of the day. Quite easy, quite simple, not complicated in the slightest. So you can actually still take a trade on this, even though it's in its flag pattern, or it's in its pattern, whatever the situation, whatever you want to call it. It's just names, guys. What you're looking at, you've got a long trade going up here, you've got a bullish flagpole running along, and then she's hit a sort of area where she's sort of bouncing along, ranging, and normally what it'll do, it'll extend from there. Either that or it'll collapse. It's got two options effectively, and that's basic support and resistance. Let's have a look at let's say a euro, Great British pound. Ooh, there's lots of drawings on here. Let's remove those drawings. And there's another one with structure. Look at that. You've got a bullish trend going up. So you actually want to go long on this. It's also, let's just take it to the day, and you can see for yourself that the structure is there. And we can put in a support level over there. So while you could go short on it, you could also wait for the long and just take a long trade. A little bit further up here, you've got another resistance which has embedded itself over here. Obviously you've got a main resistance at the top here, but you can use this to your advantage to trade with. Now you take this back to the 4 hours, make it a little bit more spacious. Like I said to you guys, these are just swing trades. This is not day trades. You want day trades, you're going to have to go down to the 5-minute chart, which we can do as well, no problem. This, at the moment, even though it looked like a bullish trade, is actually in a correction phase. So this is actually short, coming off that resistance. It hasn't reached the resistance. It could still go long and hit that, but it looks more like it's going to come down, come back down to its support level down over here, and then bounce and probably go back up, and then carry on with its trajectory further up. That's your support and resistance, and this is on basic narrow trading. There's a bigger resistance at the top here. There's obviously a bigger support down here, but these are your day levels. I mean, this is a daily level. If you're looking for an interim level, you can look for them in here. There's your 4-hour levels somewhere in the middle there. So if you want to rather get out early, you can get out somewhere at 84.40, or yeah, that's 84.60 in the middle there. But I would rather wait for the main support. It'll probably come all the way back to the main support before it goes up. And that's your support and resistance trading. That's how we trade support and resistance. It's not rocket science, guys. Keep it simple. Don't get complicated. It is good to wait for a retest if something, like say it hits the resistance, comes down, goes back up, retests, and then it will come down. That, like here, it came out, retested, came back down. That, a retest is good. It does, but you might wait for a retest forever. You might as well just take the trade, sit back and wait for it to play out. But always wait for it to give you a confirmed bar like that. This is definitely short at the moment. Definitely going short at the moment. Let's have a look at the Great British Pound, US dollar, GBP, USD, just out of interest, and there's a whole lot of stuff going on here as well. You can see that this as well, it's got a trend going down. It's got a clear trend going down, up, down, up, down, up, down. Clearly it's hit there, and it's gone short, and it's coming down to the bottom level, and it's just going to go long again. It's just so straightforward, and it'll probably reach all the way down to your main support level before it starts careering back up to the main resistance level. It's probabilities. It's 50-50, guys. It's always 50-50. You can trade in between trend lines like this as support and resistance, same thing, and it'll always give you that answer. So that's the trading. That's how you trade support and resistance, and it's pretty straightforward, isn't it? Keep it simple. Keep it simple, KISS. Keep it simple, stupid. That's it. That's the straightforward thing about it. Don't get overcomplicated. Don't go for all these ICT things and all these fancy fandangled up down, and if the moon is shining bright and it's a little bit round, you can move to take a long trade, and if it's going into quarter moon, then you should take a short trade, and all these silly, strange, fandangled, complicated complicated systems out there that you don't need. They're all 50-50 at the end of the day. So no matter what you do, nothing is going to change. It's always going to be a scenario where it's 50-50. So to get to it, the third thing that you've got to do when you're taking a trade, or what a pro trader will do when he's ready to take the trade, what's he going to do? It's the simplest thing on earth, guys, and it's not even complicated. He's going to go and he's going to look for the best entry. The best entry point. He's going to pick that point that's the best entry to get into the trade that's probably going to make him the most profit and the least loss. Don't forget the loss. Never forget the loss. Don't think you're only going to make a profit, guys. If you can't take a loss, you shouldn't be trading, because if you lose 5 times out of 10 and you lose badly, you're not going to be profitable. The only way to become profitable is to learn how to take a good loss and to become a good loser, and then you'll become a good winner. That's what it's all about. So that's the thing. Look for the best entry. Now, the bonus thing to do, and I know I don't promote this in my videos, and I know I don't bring it up in my charting, and I know I don't talk about it enough, and that is the fundamentals. You've got to learn a little bit about fundamentals. Not a lot, just a little bit. In other words, the news. Now I'm going to give you an example. For example, if you're about to take a trade on the US 500, the S&P 500 index. Let's not talk about Forex. Let's not talk about the currencies, because they shoot up and down on the news at the slightest drop of a hat. But let's talk about a bigger picture, something easier to look at, something more realistic to look at. Now you're looking at the US 500 and you're thinking, this is a fantastic long trade. I'll take a long trade on this product. I think we'll go long. And then you look at the news and there's a war breaking out. And guess who's involved? America. They're getting involved in this war. Let's say it's a war in Iran or something to that effect. Or Russia. Or even bigger. Or maybe they're having a little Barney with China or something ridiculous. Are you going to go long on the US 500 when that's about to happen? No, you're not. Obviously not. In fact, you'll probably go short. Don't look away from the fundamentals completely. Keep one eye on them. Don't play everything into them though, because I've seen a lot of guys sit and just watch the news and they're frozen, solid. They're unable to take a trade. You know, they're waiting for the Fed to make an announcement, and if the Fed makes an announcement that's going to affect their trade in such a horrible way, they won't be able to trade. So people become kind of almost frozen and unable to take a trade because the next announcement is coming up. I hate to tell you this, guys, but these announcements are coming up every single day and most of the day. You get big ones and you get smaller ones, and if you go and have a look, there's all the different announcements that are available. It's not easy to trade on the news, but big news events can sort of sway you in a certain direction, like a war or like something like an economic crash. You know, the 2008 Lehman Brothers failure would have been a big warning signal for anyone. And you know, most people the worst thing is these things happen over the weekend. So I tend not to hold my trades over the weekend if I can help it, because I've heard of people that have had a trade on Friday and come back bankrupt on Monday. You've got to be very careful of holding trades over a weekend, because these things always tend to happen over the weekend. Go back and have a look at the 2008 crash over the weekend. Most wars happen over the weekend, normally on a Sunday. There's nothing you can do. And if you're geared in futures or contracts or whatever, there's literally no way you can get out of it. And when you come back on Monday, there's going to be a margin call if you're too big into it, obviously. And the losses can be immense. You know, that long red bar can be horrible. And it can be really nasty. So be careful of holding your trades over the weekend. Investments are normally okay because they will recover and they will come back. I just try to buy my investments at a better entry level when things are counteracting or coming back or correcting or whatever the case. On a 10 or 20% correction, I'll be the first one buying, because I know it's going to come back. It has done for the last 90 years. Why wouldn't it start doing that now? So guys, the next video, I'm going to show you the hidden day traders that are never wrong. That's not today. That's probably, I think, Friday. Yeah. Don't forget to come back for that video. It's going to be interesting. We're going to talk about those hidden indicators that you don't really use. Thanks for watching, guys. Don't forget to watch the last video. Till next time, cheers and bye.